In this video, we're going to talk about how to sell not too early, not too late, but just right. Hello everybody, my name is Michael Lamott. I am the founder of ChartYourTrade.com, and our goal is to inspire millions of hardworking people just like you to take advantage of the stock market. So today, we're going to talk a little bit about selling. So we recently had a webinar, my partner Adam Sarhan and I recently had a webinar about when to sell, and basically there's a few key things that we want to look at. The first is going to be our 3-strike rule for selling. We look at 3 key things when we're going to sell a stock, commodity, ETF, crypto, whatever it is that we're trading. This is going to apply, and we want to apply these 3 things on the time frame that we're trading. So first, let's talk about time frames. We need to identify what time frame it is that we're trading. So are we a long-term trader? Are we a shorter-term trader? Are we somewhere in the middle? We need to figure that out first, because that's going to dictate how these 3 things that we're going to look at will apply. So we're basically looking at selling like it's baseball. We're going to give it 3 strikes and then we're out. So the first thing that we want to consider when we're trying to figure out when we're going to sell is trend lines. Right on a chart, you could draw a trend line on any stock or whatever it is that you're trading and see if there is a trend that the stock is following. If it is following this particular trend and it breaks that trend, then that's one sell signal. So it's strike number 1. Strike number 2 are moving averages. So we also look at the moving averages to see which it's following. This is where the time frame becomes very important as well, because if we're a longer term trader, we're not looking at the 5-day exponential moving average or the 10-day exponential moving average. We're looking at things more like a 12-month moving average perhaps, or a 200-day moving average, or maybe even a 10-week moving average. That one's actually a little bit more intermediate term, but you get the picture. We need to be looking at the right time frames for all of our pitches, so to speak. Finally, thing number 3 is we want to be considering different support levels. So as the stock is moving up, does it form a support level, and then does it break the support that it formed? So if we see each of these things getting broken, then that's the time to sell. 3 strikes, and then it's out. For me personally, I don't like to make all or nothing decisions. So once it gets 3 strikes, I'll be out of the entire position. But once I start to see strike 1, strike 2, then I'm already starting to cut down and back out of a position. I'm not going to make an all or nothing decision. Another way to sell, this is bonus. Those 3, the 3 strikes, those are more for selling defensively. So if we want to sell offensively, right? We want to sell into strength. We want to take a multiple of the amount that we've risked and then sell into strength. What does that mean? So that means that if I enter at 100 and I plan to exit with a loss if the stock falls to 95, that means that I'm risking $5 per share on that stock. If I make $10, let's say, stock moves to 110, I've made twice the amount that I've risked. So at that point, I'm starting to scale out of the position and lock in some of that gain and let the rest continue to run. If it goes to 120, so I've made 4 times the amount that I've originally risked. Then I'm taking out a little bit more. And then as it continues to work its way up, I continue to scale out a little bit at a time, and I'm doing this if the 3-strike rule did not come into play. So whenever I look to enter a position, I'm always thinking about how and when I'm going to sell. But the entering part, and if you've been trading for any amount of time, you know that it's far easier to identify when you're going to buy versus managing that position for its life and figuring out, okay, when am I going to sell and how am I going to sell and what's the strategy going to be for selling. These are some of the tactics that I personally use and my partner Adam Sarham personally uses, and that's how we come up with a lot of the strategies for how we manage the model portfolio that we have within this the service that we have. We have an advanced stock report service that helps show you exactly where to enter, where to exit, how to manage a position. So it's these strategies that get applied in real time and get shown to members. So to help solidify everything, let's take a look at an example. The example that we're going to use is Alibaba. We purchased Alibaba back in January of 2017, and we ended up selling it in December of 2017. We're going to walk through, see how it triggered this 3-strike rule, and what ultimately caused us to sell. So let's take a look. We purchased Alibaba back in January. It had formed this nice cup with handle base. It found support right at around the 200-day moving average, and it was setting up right before earnings, right? So we ended up buying on this day right here, right before it reported earnings. And the reason why we were able to buy it right before earnings was because not only just because it broke out, but because the distance between our entry point and what we perceived to be the worst case scenario was not if it fell below the handle, but down here at that 200-day moving average. We thought that it could fall down to this 200-day moving average and potentially even try to take out this support level over here. So if we measure that level, that's about an 8.5% loss to anywhere, maximum loss would be about 12%. Okay, so that's a little bit out of the range, but it was worth it to take that kind of risk because Alibaba was a leader. The support levels there were very long-term, very strong support, and the potential upside for not only the stock, but the market and the industry groups and everything was kind of pointing towards this having a strong possibility of working. So we were capping our downside risk, acknowledging that it could be at most probably in the ballpark of 8% and that it could be a little bit more. So we were able to accept that risk. The minimum where we would look to start to exit would have been right here, right? If it started to break that 21-day exponential moving average and support over here, that's where the initial stop loss was. Just because that's where the handle level is, and it would have been breaking the pattern at that point. So long story short, we end up buying Alibaba, and we get in, the trade works. So now we're following the trade along, and we're trading with the understanding that this is going to be an intermediate term trade. We did not buy this as a short-term swing trade. We bought this for our intermediate term account. So we're following the rules for that account, and the rules for that account are looking at intermediate term sell signals. So if it breaks one of these shorter term moving averages, the 5-day exponential moving average, the 10-day exponential moving average, the 21-day exponential moving average, those aren't really counting as sell signals for us because we're looking at this from the intermediate term. It's very important to distinguish what the plan is for the trade. Is it short, intermediate, or long term? So we're really paying attention mostly to this 50-day moving average over here. We want to be cognizant of what's going on the other time frames, but our trigger is going to be everything on an intermediate term basis. So Alibaba runs up and continues running, and it doesn't even break the 50-day moving average at all until we get to October. So it has a solid 10 months of just running up and climbing and not really giving us much to worry about at all. Okay, so it breaks that 50-day moving average. Let's start drawing some trend lines. So we draw some of these upward trend lines, right? So if we're looking at the first trend line, okay, it breaks this over here, right? So strike one, a potential strike two. Where is support? At this point, it was creating support right around here, right? So back there, it had made support at right around 164, right? So the way that we treat this this position and this account and the model portfolio that we had Alibaba in, well, we run an advanced stock report service, and part of that service gives a model portfolio where we're sharing our exact entry points, exit points, and managing the trade in its entirety, and giving the rationale for why we're doing what we're doing. We had this ascending trend line. It broke that strike one. Then it formed this support level over here, right? So if it tests a level and then it retests it and tests it again, then that's what's creating the support, and it progressively moving higher is also saying that, okay, the floor that it created is indeed the support level that we want to watch. So we had the support level over here, and it didn't test that one, right? So it, strike one broke that upward trend line. Strike two also broke the 50-day moving average. Didn't get the strike three. So at this point, we could have been scaling out of the position, right? That would be the way that I would like to do it. We don't get that final break of support until all the way over here. But over here, what we're also seeing is that the floor was raised, right? So it started to raise over here, then it started to raise over there. So we were able to move our stop up right to around the 170-ish level. And it wasn't until Alibaba broke that support level that the third strike was triggered, right? And we were also able to adjust our trend line as it continued to work its way higher, right? So we always want to update our plans, and we're not just updating our plans on the fly in the heat of battle. The way that we update our plans is at night on the weekend when the market is sleeping and everything is calm and quiet, and we're able to look at the chart and analyze what's going on then. And this is the way that I've been able to trade successfully part-time and to be able to do all of this while still having full-time job, family, and not being able to pay attention to the market during the day consistently, is to do all this work while the market's closed. So we have this ascending trend line and we adjusted it, right? Because Alibaba started to work its way higher and it formed a new ascending trend line. Then we were able to move support up because it started to test higher levels successfully. And then it wasn't until here in December that it finally broke it, right? So it broke the 50-day moving average, it broke this ascending trend line, and then it finally broke support. Okay, that's the sell signal to finally get out of the remainder of the position, and that's it. So something that I want to highlight too is that you're never going to catch the exact top or the exact bottom. The goal is to capture the bulk of the move, and that's why we have different rules and signals, and we follow them for different time frames, and it's important to identify the different time frames so that way we're not mingling the different strategies, and we don't end up getting confused in the moment when execution counts. In the moment during the trading day, we want to just focus on execution. All the planning is done while the market is sleeping. And these are the results that we were able to capture. We were able to capture a plus 70% move in Alibaba from January through December just by following this simple 3-strike rule, and it's something that you'll be able to apply as well. Thank you all so much for watching. I truly appreciate it. If you have any questions at all, please leave them in the comment section below and I will personally help you. Also, if you like the video, click that little thumbs up button. That really helps us out a lot. And also make sure that you subscribe to the channel so that way you're getting all of our updates. Thanks again for watching, and I'll see you again in the next video. Take care. Have a great day.